Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video, I wanted to discuss some ideas with you in the Dow. Now, of course, this is the week of rollover, or the week of expiration, and your futures contracts have essentially rolled over last week. There are, depending on the platform that you're using, you may be making the last bit of that transition this week, but the easiest way to reference which contract you should be trading is to just view all of the available contracts and then come in and see where the most volume is being traded hands, and then that will tell you, okay, the March contract, if you're focused on futures, is the place that you need to be trading. Now, what I was looking at here into the end of the day was a setup that Carolyn had mentioned off of her 78, she was looking at the hourly chart, but a 78-minute chart is almost exactly the same thing. The only difference is the 78-minute chart will evenly divide a 390-minute cash session, and that's why I like using it. So when we come in and look at this, the main thing that cues me up or says that I need to follow along with her hourly work at all is the fact that we have a squeeze in play. So for me, the combination of a squeeze along with following symmetry and that other Fibonacci work is some of the best stuff you can find for actually taking these. Now, not all of them will be as powerful as others, but you can see, generally speaking, that squeeze fires long, and then that moves with a nice move higher in price. Sometimes you have a bit of a fluctuation with it, and that fluctuation is what we're trying to measure through symmetry. So if we hide our studies just to bring clean price action into focus and then start running this, all we're looking for are corrections in an otherwise bullish trend, and this is the one that I'm focused on now as we head into Tuesday. So you can see that we've been having this pattern of relatively mild corrections, end up finding support like what we're seeing here with symmetry, and then push higher into our next extensions. So I like looking at that through the futures. I also like the idea of positioning through the diamonds. And whenever I'm looking for a short-term swing trade like this, selling the immediate short put spread and then buying the call in the next week is a good place to try and give yourself some positive theta while still capturing the directional move that a squeeze really provides for you. And then, of course, if we are able to get up off of these levels tomorrow, what I will be looking for outside of that is the 1272 extension. Here again, running it from the futures. And we very well may exceed this, of course, but a good place to consider taking profits will be at the 1272 extension of this move, and that should take us into 19842. So that's what I'll be looking at as we head into Tuesday. If you found that type of work helpful, Carolyn will still be doing that live in her course tomorrow. Now, the strategy portion of this has already been taught, but if you decide to get into this, you will get a recording of it, get a recording of Monday's trading, and then be able to participate in it live on Tuesday. So it's a foundation of what I use. I think you'll find it very helpful, and if nothing else, I'll see you at the next free video.